What up, Hyperchange? Welcome to another episode of TLDR, your weekly recap for good news in the tech and finance space. First piece of news this week is Bitcoin. The crypto boom continues to astound. Bitcoin hit a new all-time high of nearly $18,000 this week. That put the network value at briefly over $300 billion. To put things into context, that's bigger than some of the US's largest banks like Bank of America, Goldman Sachs, you name it. Bitcoin started the year at just under $1,000 a coin. So that means at today's prices, it's up almost 20 times this year alone. Ethereum also hit new all-time highs this week of $750 per token. That puts the market capitalization or network value at about 75 billion. Ethereum started the year at just $8 per token. So we've seen almost 100 times increase this year alone in the price of Ethereum. The gains that we've seen this year in the crypto asset world have just been astronomical. A bunch of my homies have been texting me about which ICOs and altcoins they should buy. I'm working on an episode that's going to go into detail about whether I think we're in a crypto bubble or not. So make sure to stay tuned for that. But perhaps even bigger news than Bitcoin and Ethereum hitting all-time highs was the real-world progress on the blockchain from a company called Digital Asset. Now, Digital Asset has been working for 2 years with the Australian Stock Exchange to revamp their entire systems with a distributed ledger, aka private blockchain technology that Digital Asset has pioneered. And just this week, they announced that ASX is going forward and implementing this new blockchain technology for their stock exchange. This is a monumental moment and probably the biggest real-world use case we've seen for blockchain technology thus far. The company behind it, Digital Asset, is right here in New York. I'm rocking the t-shirt. As you can tell, they just raised a 40 million Series B funding round in October of this year. They raised $110 million total. The company was founded by an ex-JP Morgan banker, Blythe Masters. They have an all-star roster of investors. ASX, Goldman Sachs, JP Morgan, Citigroup, BNP Paribas are all investors in Digital Asset. This is one of the leading unicorns in the private blockchain space. I'm looking to make a bunch more content on these guys because I think they're a really exciting, under-the-radar company. One last piece of crypto news this week is that the head of Facebook's messaging platform, David Marcus, who is actually the president of PayPal from 2012 to 2014, has joined the board of directors of Coinbase. For those who don't know about Coinbase, it's the #1 cryptocurrency app, basically allowing you to buy and sell Bitcoin. That's the platform that I use to store and buy my Bitcoin and Ethereum. Coinbase hit the #1 mark on the App Store this week with all of its crypto mania, and now we've seen one of Facebook's highest ranking executive join the company's board of directors. Does this mean Facebook is inching ever closer to the cryptocurrency and digital asset realm? We will see, but it's really interesting to note that David Marcus, in this TechCrunch article that explains how he got on the board, says that he's been fascinated by cryptocurrencies since 2012. Even in his Twitter bio, it says that he loves cryptocurrencies. So I'm on the lookout to see what Facebook is going to do next with this puzzle piece, inching them one step closer towards the Bitcoin blockchain world. In big tech news and acquisitions this week, Apple has purchased Shazam. That's the app that you hold up and kind of trying to hear what music is playing, and it'll tell you what the song is. Apple reportedly closed the deal for about $400 million. This isn't actually confirmed, but that's what TechCrunch is reporting. And although that sounds like a pretty big deal, in early 2015, Shazam actually raised a $30 million funding round at $1 billion valuation. So it seems like this would be a haircut. Supposedly, there was a background bidding war going on between Snapchat and Spotify for Shazam. And one of the biggest reasons that there was a drawdown in the company's valuation from that $1 billion number is because they've still really had trouble figuring out how to monetize their platform on their own. So who knows what Apple's really going to do with Shazam? Is it worth $400 million just to be able to figure out what song is playing and then buy it through Apple Music? I don't really know, but this is one of the most iconic apps. I remember Shazam as like the first cool app that people had when they had the iPhone like 5 or 10 years ago. So fascinating to see that come full circle and Apple acquire the company. In other tech acquisition news, we saw Target acquire Shipt, the same-day shipping company that competes with Instacart, for $550 million in cash this week. This comes at a time when Target and Walmart and all these brick-and-mortar retailers are trying to step up their e-commerce game to compete with Amazon. And Shipt estimates that they're going to end the year with about 250,000 paying customers, each paying $99 a year. That would represent about $25 million in recurring revenue. Shipt has also previously announced that they're expecting to hit $1 billion in revenue in 2018, but that includes all dollars flowing through their platform, so it's not really net revenue. Will this be profitable and accretive to Target? Who knows? My guess is Shipt is losing money, and Target is going to have to continue to invest and take losses in the near term to be able to compete and build out similar infrastructure to what Amazon already has. I'm still hugely favoring Amazon in these e-commerce wars. Also, this was a tiny piece of news that came out 2 weeks ago, but I thought it was awesome, so I'd throw it in there anyway. Google has announced that they are entirely powered by renewable energy. Now, it's not like renewable energy is exactly powering everything they do, but they are buying credits of renewable energy from different wind farms and solar farms across the country to offset all of their emissions and go technically, 100% renewably powered. Although it's not a perfect system, I think this is awesome news, a step in the right direction, really promising to see some of the world's largest tech companies take the lead and be renewable and go green. In the hyperchange universe, Monday, I put out a video about Model 3 production ramping. Between the Reddit threads that I've been seeing and about 100 different Model 3s that we saw at the Fremont Delivery Center this week that some guy posted on YouTube, it looks like Model 3 production is really stepping up. Then a little bit later this week, we got another report from Electrek that a Taiwanese manufacturer, the same one who said Tesla was ramping down its part orders a couple months ago in October, has now said that Tesla is actually ramping back up its part orders to 5,000 per month as Model 3 production increases rapidly. Then just this morning, Electrek put out another article saying that a new batch of Model 3 configurations has gone out. Now Tesla has been super quiet on this and they're not going to release any concrete details on Model 3 deliveries until early January when they release their overall quarterly delivery numbers. But this is really exciting and really promising. All eyes are on whether Tesla can execute and successfully ramp Model 3 production, and it looks like that's happening. My gut is telling me that most of the production bottlenecks have already been ironed out. We're smooth sailing and production is only going like this from here. Tuesday, I dropped a book review on Gucci Mane's autobiography. This was an unbelievable book. I read it in 2 days. Just an awesome story of one of hip hop's most influential entrepreneurs, filled with like ups and downs, a roller coaster. Like, I don't know, you should check it out. Highly recommend it. You can watch the book review for more info on that. On Wednesday, put out a video about the backlog of Tesla's semi-truck, how that's evolving. The company currently has 332 publicly announced orders by my count, the biggest being 100 trucks ordered by Pepsi. It looks like these orders are actually getting bigger. Those 332 trucks at an average selling price of $180,000 represent $60 million in revenue, so not that much. I also estimated that I think the truck is going to be able to ramp to about 20,000 unit sales per year by 2022. That assumes that Tesla would be capturing about 10% of the heavy-duty truck market in the US, which sells about 200 to 250,000 units per year at an average selling price of 180 grand. Once again, that would produce about 3.6 billion in incremental revenue for Tesla. So not a huge needle mover given the company's already doing over 10 billion in revenue this year. But I think Tesla's growth as an overall company is going to start to accelerate and it's going to become a really exciting piece of the business in the early 2020s. You can check out that episode for more details on the Semi. Additionally, last week I was in LA for the LD Micro conference. It was an epic first day, met all these companies, but unfortunately there was a massive forest fire right next to the conference. The second day, they had to cancel the last 2 days of a conference. We had to evacuate from the area. It was kind of a crazy scenario, so I'm still like, I don't know. It was just insane, but huge shout out to Chris Lahiji, LD Micro. It's like my favorite conference. I can't wait to go back. I know they're going to do it bigger and better next year, so I'm stoked about that. But while I did have my day off, I snuck over to Hawthorne, California, where the SpaceX headquarters is, the Tesla design studio is, and the Boring Company's first tunnel is, because I was like, hey, if I'm in LA, this is where the future's happening. Everyone's like, oh, this is Elon Musk's city. Why not go check it out? I mean, I didn't really see anything. I was hoping to get a glimpse of the semi-truck because apparently it had been spotted there the day before I went, but I did not see the Semi. I got a couple shots between the fence, what the Boring Company's tunnel looks like. They are actually digging. It looks like there is a hole, but it's really hard to see what's going on. Really fun to just walk around and like I actually saw the SpaceX rocket in person, which was just massive. So I'll play a couple more images and videos now. Hope you guys enjoy it. That wraps up this week's episode of TLDR, your weekly recap for good news in the tech and finance space. Let me know what you guys think in the comments. Subscribe if you haven't already. This is Hyperchange. Peace.